Good afternoon, it's 2 p.m. This is the Tuesday edition of Market View. Thank you for tuning in. My name is Lungilele Makagula. Do join us on our YouTube page. It's Eswatini TV and DSTV as well, channel 286. A very warm welcome. As innovation continues to emerge across Eswatini, access to funding remains a major hurdle for aspiring entrepreneurs. The government has taken note in introducing initiatives like the small-scale loan guarantee schemes housed at the Central Bank of Eswatini and the Youth Revolving Fund, designed to support business growth and empower the next generation. But what happens when young entrepreneurs still find themselves unable to access the capital they need to bring their ideas to life? And in studio today, we are joined by Lwazi Dlamini, who's the founder and senior partner at Pinnacle & Company, a consultancy that specializes in connecting businesses with venture capital finance. He'll be joining us in studio today, so do stay tuned. And on our news today, on Monday, the House of Assembly gave the green light to 3 loan bills totaling approximately 4 billion emalangeni, which is a move aimed at settling government areas and also expanding the rural electrification projects. Let's go straight into it. In our first story, on Monday, the House of Assembly gave the green light to 3 loan bills totaling approximately 4 billion emalangeni, a move aimed at settling government areas and expanding the rural electrification project. Of this package, a massive 2 billion emalangeni from the World Bank is set aside to clear outstanding government areas, which include payment of suppliers. The Minister for Finance, the Honourable Neil Reichenberg, has outlined the processes these loans bills must undergo before payments can be made and when suppliers can expect payments.
Suppliers hoping for immediate payments following that the House of Assembly gave the green light to 3 loan bills totaling 4 billion emalangeni will have to hold on. Of the total package, 2 billion emalangeni is earmarked to clear outstanding debts, including payment of suppliers. However, the Minister for Finance, Honourable Neil Reichenberg, says the funds still have to pass through several stages before any money starts flowing. So, while the approval has been granted, the wait continues for a little while.
What has been passed so far is the House of Assembly passing the loan. So this $100 million that we're learning from the World Bank is definitely going to be able to pay all suppliers that are currently in the system at Treasury. And we're looking forward to that. It's going to be great. But it must still, this bill must still go to Senate. We've already workshopped Senate. Senate will accommodate us as quick as they can. My gut feeling is we're looking at probably next week because they're still doing stakeholder consultations on this, and it must still go through the different debates in the House. We're probably looking at maybe the next week when Senate will finish it, probably the following week that you get it fully gazetted and all those things done, then maybe one more week after that for the money now to be released by the World Bank. So we're still looking at about 3 weeks before we actually see the money physically landing in the accounts and being able to pay all the suppliers 100%.
We also asked the Minister for Finance why the issue of supplier payments keeps recurring and if it stems from expenditure patterns or planning challenges. And this is what he said.
When I came as a minister, there was 6 billion emalangeni of arrears in our country. We managed to get it down to around 2 billion, but unfortunately the methods we were using to get it down was by not spending the budget fully. But now, unfortunately, the last 2 or 3 years, we've now been fully spending the budget, which is a good. It's got a good side. You know, you pass a budget for a road because you want to build the road. But unfortunately, it hasn't. The gap that we were using to close the arrears gap has now no longer there. Hence, we now must loan money to close the final gap of arrears. What caused the arrears was budget overspends. And in the last few years, we have not had budget overspends. Hence, we can now use the saying of, now the tap is closed, we can mop the floor. And that's why we're doing that. And we really believe, if we obviously can raise the money we need in every year's budget, that we never must get back into a situation of not paying suppliers on time. We're hoping that we're going to put it behind us once and for all. So in about 3 months' time, really believe, 3 weeks' time before this money is raised, but all the other monies we're raising as well, we'll get in about 3 months' time, then really once and for all in Eswatini, we believe the word arrears and not paying suppliers will be a thing of the past.
In his motivation for the loan to settle government arrears, Chairperson of the Ministry of Finance Portfolio Committee, Maui Khumalo, highlighted the financial strain on businesses, many of which are shutting down due to unpaid government debts. He explained that the loan will be repaid in 22 semi-annual installments with a 3-year grace period, during which only interest will be paid. He further noted that the loan will push the national debt stock to 37.86 billion emalangeni, representing about 46% of the country's GDP. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa and Derek Msibi, Lobamba.
There has been a concern at government's continued access to loans from international financial organizations, with the latest being the 4 billion Malangeni loan bills recently approved by the House of Assembly. This will see the national debt stock rise to 37.86 billion Malangeni, representing approximately 46% of the country's gross domestic product, with some business sectors asking why the minister does not use the 4 billion bond program at the Johannesburg Stock Exchange. Meanwhile, Minister for Finance, Honorable Neil Rackenberg, has indicated the rationale behind these strategic financial decisions, highlighting their importance in supporting national development goals.
We raise the money in tranches at the JSE. So interestingly, we are actually, as we speak, we are going for another tranche of money from the JSE. So that money will come in addition to this money that we've raised over here, keeping in mind that we're raising money not only for arrears, but we're raising money also for this year's budget. This year's budget needs another 1.8 billion emalangeni in it as well, which was passed by the House, which is healthy, nothing wrong with that. But we are raising a total of close to 4 billion emalangeni to make sure that we are dealing with arrears as well as this year's budget, because otherwise we'll pay the arrears and then 1, 2, 3 get back into supplies not being paid, because there's a need in this year's budget of 1.8 billion that also need to fill.
All right, and that's it for our business news. It's 7 minutes after 2. Stay with us. When you come back, we discuss venture capital with Lwazi Dlamini.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back. You're so tuned into Market View. This is the Tuesday edition. Thank you for staying with us. As innovation continues to emerge across Eswatini, access to funding remains a major hurdle for many aspiring entrepreneurs. Government has taken note, introducing initiatives like the small-scale loan guarantee schemes housed at the Central Bank of Eswatini and the Youth Revolving Fund, designed to support business growth and empower the next generation. But what happens when young entrepreneurs still find themselves unable to access the capital they need to bring their ideas to life? Today in studio, we're joined by Eswatini, who's the founder and senior partner at Pinnacle and Company, a consultancy that specializes in connecting businesses with venture capital finance. A very good afternoon, Eswatini. Thank you for coming through to Market View. Yeah, so let's talk about venture capital, a very critical topic, particularly for entrepreneurs. So how does venture capital differ from other forms of financing?
Thank you so much for having me here. It's an honor. So I have a simple definition of venture capital and the textbook one. So the simple one is, this is capital that is patient and that is willing to fail. So the textbook one, basically it is a form of private equity or a form of capital that is deployed by venture capital firms, or it is high net worth individuals. They deploy it into high growth, early stage startups that have got a high growth potential. I think that is one way of explaining it. And to also say that unlike the traditional funding models, so a venture capitalist would go into a business, fund a business, knowing that it might fail. So when the business wins, they also win. So what basically that means is that a VC comes in to help grow the business. So what that means is that they bring not only the capital, but they bring their experience, they bring the mentorship, they bring access to markets and all other benefits.
So it doesn't just fund, but it helps the business to grow. It helps it grow.
Yes.
All right. So yeah, okay.
And another way, maybe to explain it further, is that the investor comes in to ask for a share in your business. So unlike if you've taken a loan, they will require you to pay back the loan, regardless of the business performance. So a VC will come, they buy a share of the business, and then they exit it between 5 or 7 years afterwards. So they get their return later on. That is why I called it patient capital. And yet when you have taken a loan, you're supposed to pay back the money monthly. So that means a bank, for instance, will require you to have assets, so that when they give you the capital, they know that there are assets that are backing it. And also cash flow as well, that you've got cash flow to be able to repay the money. And venture capital is more like it's long term. You're required to give back their dividend long term.
Yeah, so I suppose it is very crucial for startups, especially in Eswatini. Why is it crucial for startups?
I think I've mentioned earlier that it's not just about the capital. You know, when you're a startup, you are starting a business. You don't have experience most of the time. You don't have the networks that will allow you to get clients. So it offers you that opportunity to be able to tap into their network. And also what is important is the corporate governance, which you find that some startups will fail because they don't have those structures in place. So in emerging markets like Eswatini, where we have got financiers that are risk averse and also collateral based, and they provide collateral based funding, you know, venture capital tries to bridge the gap. You know, because there is some way where an entrepreneur will not have the money. So it tries to bridge the gap between the suppliers of capital and the demanders of capital. So that is how I explain it. And also, it helps to help with the job creation, because startups that are high growth startups, they become big employers. I'll give an example just next door. There's Theo Baloyi, who started Batu Shoes. So he was working for PwC and in Dubai, but decided to come in and start a local shoe brand. And now his company is hiring, or he has hired more than 400 people. So because it was a startup, it was innovative, it was offering a new solution that was solving local problems. So in that way, if you are able to bring in a venture capital, it means that you are able to create jobs, and these jobs, they contribute meaningfully also to the economy of the country.
So, owning a business or being an entrepreneur comes with a lot of challenges, Lwazi. So what are some of the challenges that are there in attracting VC into Eswatini?
I think there are 4 challenges that I would want to highlight. The first one, of course, is the population size. So our population size in Eswatini, 1.2 million people, it limits internal scalability. So because VCs are interested in businesses that can scale in other markets. So if you're looking just internally, so it limits that. And then the second thing that I can say is the early stage kind of funding. The funding that will come from your friends, maybe just to look at a curve on how a startup is able to raise money. So the first stage will be when you're putting your personal investment. So I'm taking my savings, I'm starting the business. Then you need to move to friends of friends. Friends or family, they put in the money. Then just before a business takes off, you find that there is a valley of death. So in the valley of death, that is where you would probably want to get additional funding. But you find that you don't have the cash flow to back the debt if you are to go for debt. So I think that the second challenge really is getting that capital that will help you to just take off, to just cover the 5 months, the 12 months where you will not be making any money. So it comes and gives you the runway, just like a plane that before it takes off, it needs a runway. So VC sort of provides that kind of capital. So the challenges that are there at the moment is that you don't have that runway. And then the third thing, I think it's unclear regulatory unclear regulations for investors, so which I think the boss that the government has introduced, the One-Stop Center for Investment, is trying to close that. And then the last one that I think is very interesting, from a VC perspective, I'm giving a VC perspective here, is the clear exit pathways for them. I mentioned earlier that they exit in 5 to 7 years. So it is important that they are able to exit, whether through IPO. The stock exchange in Eswatini has got the SME board and the main board. So eventually, a VC has to exit. So when they exit, either the startup will take the IPO route, which is listing on the stock exchange, or they go for acquisition, which is other companies coming to buy the company, mergers and acquisitions. So I think those are the challenges that, from a VC perspective, they look at when they are looking at Eswatini. That's what they look at.
Right. So can we safely say VCs play a critical role in reducing youth unemployment in the country?
Yes, we can safely say, but maybe not yet in Eswatini, but in other countries. I gave an example of Batu, shows that, if they had invested, I don't know their structure, but if a VC had come into Batu, and then I could safely say that it then contributes in the long run to reducing youth unemployment.
Okay, so what exactly are VCs looking for?
Okay, so VCs, I will just highlight one because it depends on the sectors that are interested in, it depends on the ticket sizes that they want. But typically what they look for is there are some sectors that they prioritize. For instance, whether it's fintech, manufacturing sector, agri-tech sector, or the health tech. So it depends on the preference of that VC, what they're looking for. And then also the inclination, you find that, now we are becoming more conscious in terms of a climate. So you find that they are climate inclined or gender inclined. So that is what. And then they also look at the traction. It's important to get traction. So you find that some will tell you that they need revenues. The company must be EBITDA positive. It must be 3 years operational. Sometimes, they've got minimum requirements to say that they don't invest less than 3 million rand or Malangan. So you find that now the startup they are looking for must require capital that matches their minimum. Right. So I'll just give that.
Right. Just before I let you go, one last question. We have limited time. So what should a startup in Eswatini do to become VC ready?
Okay, first of all, please solve local challenges. It must have a local context, but it must be scalable. So you build in Eswatini for the global community. And then make sure that you also have a strong financials. Okay, well, you keep your financials and you ensure that you've got governance structures in place, you've got a compelling pitch deck and data room, and then you must demonstrate either revenues or user growth or partnership, but there must be something that you have that is unique, that shows you that you are growing. And then also a clear exit path for the VC. If they come in, they need to know how they're going to get their money back.
All right, thank you so much, Lwazi. That was Lwazi Dlamini, just educating us on the benefits of venture capital. This was beneficial for entrepreneurs, particularly start-up businesses. Let's take a break. When you come back, we connect with Sanel Sbia for today's market analysis.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds, full of wonder. You choose a path to awaken your senses, to feel the rush of life overwhelm you, a world to make you look up and realize just how inspiring this life can be. You ask, and we give you the royal experience. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. There are but a few places on earth so special, so unique, and so spectacular, where it becomes the rite of passage for the ambitious travelers, the courageous souls, to all have the one and only royal experience. That day when you look deep into your heart and leap into an ancient world so very different from your own, where magic, beauty, and love are shared forever. Then you will have a whole experience. There is just one place on earth where the people make you feel a part of their kingdom, where you just might volunteer to awaken spirits, enrich minds, and work alongside communities to build, motivate, and inspire. This is truly the royal experience.
Welcome back. It's 24 minutes after 2. This is the final segment. We get into today's market analysis with Sanel Sbia. Mr. Sbia, very good afternoon and welcome to Market View. How are markets reacting today to the U.S. debt profile? We have about 6 minutes for today's analysis.
Thank you, Lungelele. I think 6 minutes will be more than sufficient considering markets in the U.S. are closed. for Remembrance Day. So when we look into Europe, what we're seeing there is, there's some positive tempo there that's coming in, more especially within the London Stock Exchange. We're seeing the FTSE 100 back on that 8,800 mark. So those were the levels we saw when the markets entered into what we call the Trump market, in the earlier days of the Trump presidency, when we expected good things to come from the Trump presidency. So we're back at that level. That's largely driven by the fact that we've seen a bit of a drawback in those threats towards those tariff threats against the European Union. Remember, President Trump last week threatened something close to 50% or thereabout on European stocks, and then therefore now that we're seeing markets reacting positively to that drawback, to that pullback. And then also what we've seen happening in London, Lungelele, is that upward that upward revision on the UK's expected growth for this year. That's on the background of those easing tariff talks. So that deal that the UK has striked with the US, and also we've seen what has happened in Europe. We've seen Europe and the UK coming to a deal post Brexit. So now that deal signifies that the UK is not going to be isolated within the European market space. So all of those sentiments are edging markets to the positive side. And then overall, Europe is pulling up as well on the fact that that tariff threat has somehow been mitigated, at least for now. So when we move to Asia, Lungelele, those sentiments are carrying through to the Asian markets in the sense that you are seeing the Nikkei also posting those positive gains. You're seeing the Hang Seng also posting positive gains, gaining 100 at some 99 points, and we're also seeing the Shanghai positive index on the green there. So what we're seeing happening within that dynamic, Lungelele, is the fact that if President Trump does not threaten Europe much, then the likely impact on global demand of the Trump tariffs is actually getting minimized by the day. So that markets are seeing relative steady demand to come in the days going forward, and that is augurs well for those tech stocks and those electronic vehicle manufacturers in China. Remember the European Union is China's biggest market for those EVs, and those technology stocks are also destined for the European markets, those technology products there. But the markets are waiting eagerly, Lungelele, to see what is going to happen in terms of the US data that's coming out, which is the Consumer Purchasing Index data that's coming out this week, and that's going to give the markets clearer direction in terms of where the markets are going to go, where the interest rates are going to go in the US, and that's going to probably set a tone for interest rate downward revision or upward revision across the globe. But now what we're hoping for is there will be a bit of a cut in the interest rates in the US, and that's what markets are betting on right now. And then when you're coming to South Africa, you can see there has been a bit of losses there. So that's purely because South Africa is a minerals-based economy, and we've seen news come out of that of that decline in output, in overall mineral output within the South African economy. So now that has actually just taken a bit of momentum of the markets when you look at those JSE metal, or the JSE top 40, which is dominated by those metal producers there. But still, we are anticipating good deals. And I mean, we saw what happened in the last week in the US last week, and those movements, those shifts towards opening markets, and those talks around AGOA. So the markets remain upbeat in South Africa as well. And then in the domestic economy, nothing has changed as of today. We're still on that 475.38 mark. And then when you come into gold, when we see that the easing of tariff threats between the European Union and the US, that somehow now brought back a bit of stability into the market, and that's somehow driven the price of gold down. And when you look into the commodity, into Brent crude oil, you can see that it's actually lost marginally, still staying on that $64 per barrel, purely because we know that our OPEC countries have actually agreed to increase output a bit. So now that's keeping the future price of Brent crude down at that level, at that 64, because we do know there's going to be increased output. And then when you look into the currencies, you can see that the dollar remains relatively weak, which goes to support the gold, but at the same time it shows up the Langeni dollar exchange rate, which now sits at 17.89, which are the levels we saw at this time of the start of the GNU. And that deal with that drawback on those tariffs has actually strengthened the euro a bit, and we've seen the Lilangeni losing a bit of ground on the euro, but we remain very strong against the Japanese yen. Lungelele, thank you.
All right, thank you, Mrs. Bia, for that analysis. Always appreciated. We'll see you again tomorrow. We've come to the end of our program. Thank you for tuning in. We'll see you tomorrow at exactly 2 p.m. Enjoy the rest of your day.